Hi, I'm Jonathan Banks, Executive Automotive Analyst at NADA Used Car Guides, with our automotive update for November. Once again, automotive sales were a bright spot in the relatively somber headlines throughout October regarding the U.S. economy. New vehicle sales are up 7% compared to last year, with the sales pace of 13.2 million, the best since February. Chrysler and Volkswagen posted solid gains, with Chrysler sales up by 27% compared to last year's figures. There were also notable increases on luxury brands, with Mercedes and Audi posting 20% gains compared to last year. GM and Ford posted more modest gains, but still maintained the top two positions for overall sales. Toyota and Honda continue to suffer from lack of inventory, with sales in October below last year's levels. There were some signs of life on sales for the Accord, Camry, Corolla, and Civic, but the disruption to the supply chain by the flooding in Thailand may introduce new challenges. New vehicle inventory reached 58 days, representing the highest level of inventory seen since February of this year. Meanwhile, overall incentive spending in October declined by 7.6% on a month-to-month basis, to reach an industry average of just over $2,450 per unit. Taken together, this presents a case that there remains strong demand for new vehicle purchases. I recently read some articles where analysts are calling October new vehicle sales a mini bubble, driven by pent-up demand from low inventory. But we believe that fundamental demand factors are more likely in play. Replacement demand continues to bring consumers into the new vehicle market, and high-profile redesigns, more variety, better fuel economy, and more striking designs will continue to bring consumers into the dealer showrooms. In addition, robust incentives on many vehicles, especially evident on leasing and finance rates, should keep the new vehicle sales at the 13 million pace that we witnessed during the beginning of the year. The used market is beginning to show signs of normal depreciation, with wholesale prices on 2 to 5-year-old vehicles, according to AuctionNet data, declining an average of 2.5% from September to October. Although price drops weren't as extreme as they were in September, compact cars, mid-size cars, and mid-size vans all continue to give back a sizable share of the premiums gained through the first half of the year. One factor driving down the prices was the increase in off-rental units entering the market. This pressured the historically high small and mid-size car prices down by as much as between 5 and 5.5% on 3-year-old models. NADA also witnessed average declines on van prices by 3 to 5%, which also have a relatively high rental fleet penetration. The good news is that the steep declines from the peak seem to have subsided in the past 3 weeks, indicating that we may be in a more stable price situation for small and mid-sized cars. Wholesale prices on small and mid-sized cars for the week ending November 6, for example, were virtually unchanged week to week. This is in stark contrast to the dramatic declines on small cars witnessed during the end of September and early October, where prices dropped by about 1.5% per week. Values for large pickups outpaced the average decline as low supply, stable fuel prices, and seasonality kept pickup prices from falling beyond 1% in October. Prices for pickups remain strong, even though incentives on new models have been driving higher sales for the F-150 and Chevy Silverado. Luxury midsize and near luxury cars realized average price declines of 3.6% and 3.9% respectively, which is attributed to fairly healthy incentives on the new car side and low consumer confidence, which puts a damper on luxury used vehicle demand. Auction prices continue to be strong from a historical standpoint, with year-over-year increases on cars still around 7%, with utility and vans up by 5%. Trucks are also experiencing gains of 3% compared to last October. Official used car guide value adjustments for November's edition assume that the sharp downward trend witnessed on compacted mid-sized car prices over the past few months would be sustained. We believe the continued injection of off-rental supply, relaxed consumer demand, and most importantly, a move away from record-breaking prices would result in a month-to-month reduction in used prices by 3% or greater on small and mid-sized car segments. Mid-size van values were similarly addressed for this month's edition, with the heaviest reduction being concentrated in later model years and on models with significant rental fleet penetration. Downward adjustments for the majority of the remaining segments were mild by comparison, as large pickups, SUVs, and most luxury segment average declines came in at about 2.5% or less. Looking ahead to December, we're expecting that prices for compacted midsize cars, midsize vans, and luxury vehicles will continue to fall beyond normal seasonal levels, with declines on our values being similar to our adjustments for November. Price changes for most other segments will most likely be modest to flat relative to November before starting the seasonal rise normally witnessed with the transition into a new year. Thanks for joining me, and please take a look at NADA's November guidelines for more information.